This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The price cap that G7 countries want to impose on Russian oil to punish Moscow should be set at a fair market value minus any risk premium resulting from its invasion of Ukraine, a U.S. Treasury Department official told reporters on Friday. The Group of Seven is trying to find ways to limit Russia's lucrative oil export revenue in the wake of its invasion of Ukraine in February. Several different countries have banned imports of Russian crude and fuel, but Moscow has managed to maintain its revenues through increased crude sales to Asia, particularly China and India. The price cap's level is unclear, and US and EU officials have not specified a numeric range. However, extrapolating from recent US guidance suggests that it could be set at around $60 a barrel.
Oil prices rose about 4% on Friday, supported by real and threatened cuts to supply, although futures posted a second weekly decline as aggressive interest rate hikes and China's COVID-19 curbs weighed on the demand outlook. Russian President Vladimir Putin has threatened to halt oil and gas exports to Europe if price caps are imposed, and a small cut to OPEC Plus oil output plans announced this week also supported prices. Brent crude rose $3.69, or 4.1%, to settle at $92.84 a barrel. U.S. West Texas Intermediate (WTI) crude rose $3.25, or 3.9% to settle at $86.79 a barrel.
Moving on to the top news in the energy sector.
European Union energy ministers on Friday tasked Brussels with drafting proposals within a few days to cap the revenues of non-gas energy producers and help power firms stay afloat. But as they sought to protect citizens from soaring energy prices that have driven inflation across the continent to record highs, the ministers backed away from more divisive proposals to cap Russian gas prices. At an emergency meeting in Brussels, the ministers instead asked the European Commission to propose broader gas price caps, even as the EU executive itself swiftly poured cold water on the feasibility of such an idea.
Oil demand in China, the world's biggest energy consumer, could contract for the first time in 2 decades this year as Beijing's zero-COVID policy keeps people at home during upcoming holidays and reduces fuel consumption. Hundreds of millions of Chinese who typically hit the roads in domestic flights during the Mid-Autumn Festival, falling on September 10 this year, and early October's Golden Week holidays are expected to stay home to avoid being ensnared by sudden lockdowns to curb the spread of COVID-19. Lockdowns in key cities such as financial hub Shanghai already hurt China's oil demand in the second quarter, while recovery for the rest of the year is expected to be slow as China sticks to its zero-COVID policy. This could cap intake of the world's top crude oil importer and dent global oil prices. Next, we have the top news in metal markets. Investment banks are set to make a record-breaking $20 billion trading and financing commodities like oil, gas and metals in 2022. More than triple what they earned in the years before COVID-19, analytics firm Coalition Greenwich told Reuters. Banks such as Goldman Sachs, Citi and Macquarie have benefited from massive volatility and supply chain disruption in commodities markets that began in 2020 and increased this year with Russia's invasion of Ukraine. Sky-high commodities prices have pushed inflation to multi-decade highs, stifled the global economy and created a cost-of-living crisis in many countries.
Prices of copper and other industrial metals rose on Friday, boosted by a weaker dollar, optimism about top metals consumer China, and as persistent smelter shutdowns keep supply in check. 3-month copper on the London Metal Exchange had gained 0.7% to $7,865 a ton by 1600 GMT after rising by 2.5% on Thursday. It has climbed about 3% so far this week. US COMEX copper futures rose 0.9% to $3.56 a pound. Data on Friday showed China's consumer prices rose at a slower than expected pace while producer inflation hit an 18-month low, leaving room for further central bank policy easing.
We will now look at the top news in the agricultural sector.
Rice loading has stopped at Indian ports and nearly 1 million tons of grain are trapped there as buyers refuse to pay the government's new 20% export levy on top of the agreed contract price, 5 exporters told Reuters on Friday. India banned exports of broken rice and imposed a 20% duty on exports of various other types on Thursday as the world's biggest exporter of the grain tries to boost local supplies and calm prices after below-average monsoon rainfall curtailed planting. The duty became effective from midnight, but buyers are not ready to pay the duty, said B.V. Krishna Rao, president of the All India Rice Exporters Association, AIREA. We have stopped loading vessels.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.